All right, what's up, everybody? Chris Franks with TexasWest Capital. I've got my friends, Andrew and Tillman, sitting in the wings here, waiting to join in. Now, they're great guys, as y'all know. As a matter of fact, I know y'all come here to actually see them rather than me. Smart marketing on my part, right? Before we get going here, do me a favor, hit the thumbs up, hit the like, hit the subscribe, follow the channel, follow the account that you're watching this on. We simulcast across, X and YouTube and Twitch and Facebook and Instagram now. That last one's kind of a pain in the butt, but it is what it is. Just trying to get out there where y'all can see us. And make sure you follow the two guys there below, Andrew at AP_abacus and Tillman at TexasOL61, both on Twitter or X or whatever you happen to call it. You can follow me at TXWest Capital. We love having you guys here. A lot going on this last week. A lot of things that people aren't too happy about. So we'll bring on the guys here. We'll see how they're doing. What's going on, gentlemen?
Yo, how are you?
What's up?
Yeah, well, that's. I guess we're going to start real quick here by congratulating Andrew, or at least his significant other, on the successful.
Hey, I had like 4.5 minutes to do with this child being born, right? Like in the beginning at conception. I mean, I had some commitment to it, but
4.5 minutes. You liar.
Yeah, just a wonderful deal. It's been amazing. Friday morning, 10:03, she was born. Just a beautiful little girl, and my fiance's doing wonderful, happy. It's just peaceful here at the house. They're doing really, really, really well, and just a blessing. I mean, just an incredible blessing. My kids are all excited, and they're always wanting to be around the baby and to enjoy it. But it's a joyous thing. Kids are an absolute treasure, and I'm just very blessed, very thankful.
I think that's one thing the three of us can definitely agree on. We're all definitely about family and the importance of having kids and raising them properly. So I think, I think we all kind of feel that when you say that.
You got to have 3 or more to keep the population growing. So, that's Andrew's doubled his quota.
I'm 2x. Yeah, I'm 2x the quota. I should get some sort of gold star on my Twitter account. Elon should give me an extra.
But listen,
tag.
You saw one of my tweets a couple weeks ago. I think, if you have more than, if Elon believes that depopulation is the biggest risk to the earth, and you also believe that Americans are the most industrious, creative, they're an asset to humanity. We have to increase our market share. And the only way to do that is by 3 or more kids. So if you have 3 or more kids, no federal income tax. You heard it here first. That's the new proposal.
Well, and if you have 6 kids, you get to choose, somebody somewhere where you get to get their tax refund every year. And so I drink your milkshake. My neighbor here, and I drink your milkshake.
Oh, Lord have mercy! How quickly this kind of went down the rabbit hole there. But hey, it's good. It's good though. Again, I think what we do is good here, especially in times like this where prices dropped. Oh my God, 20% in like.
Hey, your favorite coin is 21% discount today. That's the way
it should be viewed, right?
The line should be out the door. It's people are puking it up.
Most people don't even respond to a 20% discount sale at the likes of their favorite store. They're like, I'm gonna wait until whatever it is, the Friday after Thanksgiving when everything's 50% off, and then I'm gonna go rush out and buy a bunch of stuff, or there'll be a 40% sale for Memorial Day or whatever it happens to be. So the fact that our brains work like that when it comes to consumerism, 20% doesn't really do it for us, but in the world of finance, a 20% drop, everybody freaks out.
Yeah.
It's I mentioned it yesterday. This is a dip for ants compared to previous Bitcoin cycles. Yeah. It's a joke. It's nothing. This is, we had 20% drops on the way up to the top over the past 9 months. I think this might be the third time, because we went up to 73 or so, dipped back to the 60s and a little bit into the 50s. And then we went on a run, and then we dipped back and we went on another run. So yeah, this is not anything to get all upset about. We were on another show on Tuesday, and it was hilarious. They pulled up the fear and greed index, and once you click on it, it goes to some other stats. And the fear index was at a 25, and you look down a couple spots, and it says the greed index was at 73 1 month ago. 1 month ago, the indicator was at 73 to greed. Now it's at 25 to fear. Like, there's nothing about that that's rational at all.
Yeah.
Well, the big red candles scare people, and the big red candles that are followed by more big red candles, and then followed by another round of, I think we've had 4 kind of monstrous candles in every market. In the last 24 hours, $350 billion erased from crypto in liquidations. But my whole point is like, that's a sign of a bull market right there. That the liquidations, when you see a dip that's driven off of retail getting overextended in margin and all of that cash getting liquidated, that's like that's the first rule of trading, is like, traders, when big fish can liquidate a bunch of retail cash, it makes their cost basis go down. So now they can accumulate their position, which takes time when you're trying to amass a major position. That these opportunities are literally how they create their position. And it's interesting. I was in the spaces yesterday, and there was this argument about how Michael Saylor's strategy will eventually come to bite him, because he doesn't have anything. There was half the group that was, or more than half, that was, of the thought that he doesn't have any long-term strategic vision for creating yield with his Bitcoin, and therefore the size of his stack lends him no commercial advantage. And I just think that's the dumbest thing I've ever heard, honestly. I think that in the world of finance, he who has the most gold makes the rules. That's like 101 in every. And so if you're talking about the Bitcoin ecosystem, or the ecosystem of smart contracts and stores of value and insurance coffers and on-chain value, if you talk about all of that, it has to be driven off Bitcoin. And I think this is just a retail shakeout for the big institutions to start gobbling up as much Bitcoin of the 21 million that they can get. And when you see 5 years from now these shakeouts, it's gonna be equally as violent, but it's going to be from a much higher price down to a much higher price than where we sit today. And that's been the history of Bitcoin, right? We've seen these like, this is nothing. And the fact that they can only move at 21%, and they can get $1.3 billion liquidated in margin calls, that should tell you like how bullish the sentiment was going into this shakeout. Everybody thought it was a cinch that we were going to 125, 150. That's when the market does these shakeouts to suck all that conviction out of the market in the form of liquidity.
Yeah, exactly. And Brian here is saying, altcoins are down 60%. And they are. But what if we talked about the entire show, the entire 36 episodes now, is how, we're going to see altcoins behaving differently than what they did previously because of the Bitcoin ETFs, and that we would see probably sectors of altcoins coming up rather than maybe a full blown, all the crap rises kind of alt, season thing.
I've settled on a theory associated with altcoins. I ignored meme coins. Just ignore meme coins. It's a complete waste of time. But I've settled on a theory associated with altcoins, and that theory is that it makes sense for me to pay attention to the altcoins which are in BlackRock's BUIDL portfolio. So they have an internal fund, BUIDL, that houses, I believe, Aptos, Avalanche, Ethereum, Polygon, and a couple of others.
It's all the smart contract layer
right.
protocols.
So it's Aptos, Arbitrum, Avalanche, Polygon, Ethereum, and Optimism's OP mainnet, which I don't really know what that is, so I'm not going to count that one. So that being said, those five, at minimum, unless something weird happens, those aren't going away, right? So BlackRock is holding positions in those particular altcoins. BlackRock is building on those particular altcoins, and so it makes sense that if I'm going to stray even in a small, meaningful way away from Bitcoin as a product, Bitcoin as an asset, and then Bitcoin's ecosystem, which continues to grow in terms of futures and swaps and options and debt and all that stuff, I'm not going to move meaningfully beyond what Larry Fink is using and his team is using, because they seem to have a pretty good feel for where we're headed. So with that being said, those are the only ones that I'm going to give much thought to. Sure, Solana. We announced that we've launched a Solana algo with Arch Public here earlier this week. But beyond that, I don't think there's much that I'd fool with, because you got to think to yourself, who's behind and who's using these blockchains and using them in a meaningful way. That's a difficult place to begin searching and looking, and what kind of users are here, where, there, and everywhere. But BlackRock seems to be a good place to start, and so
I couldn't agree more. For 99.9% of the populace out there is like, follow the leaders of the industry, and you're going to be led to a victory essentially. I do think though, like Larry is focused specifically, and those coins are focused specifically on tokenization of assets and smart contract mechanisms. I think there's a lot of really exciting kind of emerging markets. I would preface it this way: if I look at an altcoin, I am not looking like I did in previous cycles around how slick their development team is, how slick their website is, what their Twitter count is. I'm looking at utility. I'm like, are they solving a real problem? And one of the telltale signs that a company has lost their way and isn't fitting, it doesn't fit in my core values as what I'm looking for, is whether they've launched a coin for no reason. And there's so many companies out there that you're just like, why did they have to launch a coin to solve the problem that they're trying to solve? And if they have done that, I would personally pass on it. And if they haven't done that, and they're committed to this cause of solving this problem, and you start seeing real world partners that have that problem within their business model start coming in and giving them money, those are exciting things. I think blockchain is just so deep and wide that those utility slow growth projects typically don't get that much shine, and nobody really talks about them until they have critical mass, and it's kind of they've proven their worth over a long period of time. Whereas the meme coins are the flashiest thing in the room, and you can make a quick buck, or you think you can make a quick buck by playing with them. So,
well, and let's face it, and this is probably going to hurt a lot of feelings that are listening in at the moment, but the reality of it is most people are gamblers masquerading as traders, right? You've got people out there, you've got these Twitter accounts out there going, hey, listen, this is how you trade. You go in, you get something that's just launched that has like below a $400 market cap, and then you get in there, and then it's going to go up to a $500 market cap, and then maybe a $10,000 market. Yeah, and all you're really doing, and they're saying, listen, this is trading, and that's not really trading. It's gambling. You're hoping that you get in on something really low that goes up really high, and you're also assuming you're going to hold it the entire time, which reality is you're probably not. But that is a lot of the altcoin, trading that's going on. It's a lot. And those accounts get a lot of attention because retail comes in with the same idea came in when I first started 30 years ago. And I assume probably the same way y'all started, which was, man, I can do this. And there's no real training I have to have. I can just jump in and do it. And look how easy it is. And I'm going to get rich overnight kind of ideal, right? And that's how, most of us come in as retail. And then you learn the hard way, pretty quickly. Well, hopefully you learn pretty quickly. Sometimes it takes a while. It takes a couple of you run through your money. You go back to the ATM, you're in the casino at the ATM. You go back to the ATM, you pull out more money, you lose more money. You go back to the ATM, you write a check, you cash the check, you sell your.
You just buy another year of education. You just keep feeding the education monster. That's what it is. And if you want to learn anything, it's going to take you money, especially if you don't have a teacher. It's going to cost you, right? And the thing that I think technical traders get. Especially early traders, they get into this mindset that these patterns can't be violated.
Yeah.
and you get wrecked if you think that way. The market actually, everybody can see the patterns, right? We all, if you study long enough, you can see them. So you have to start thinking, okay, let's say this pattern is true. Let's say there's a really nice setup based upon a pattern I'm watching in a specific stock or equity. And let's say I start plotting it out like textbook. Well, that's not going to happen. Why? Because everyone has the same textbook. They're going to sweep through targets to make you very emotional. And so you have to then add like a depth of liquidity sweep. So you have to find where that liquidity pool is, and you have to basically go to the bottom of that liquidity pool, because that's what their price is typically going to do. And if you can successfully make entries into those positions, you can target them. The problem is that everybody wants it to be textbook because it gives you the warm and fuzzy that you're following a path. And that's when you do it with when you do it outside of the textbook parameters, you feel like a lone wolf out there flying in the wind by yourself.
Well, and this is why I always say, anybody that follows me anywhere, anytime I'm on any show, I'm talking about anything, I'm posting online, whatever, I always, at some point, I'll bring up the same point that there are no guarantees in trading, other than you're going to lose money from time to time, no matter how long you've been in it. Guaranteed you will lose money at some points. Also guaranteed is the newer you are, the more money you will lose and the more often you will lose it. And those are due, firstly, because when you first come in, you really don't understand the importance of risk management and how that is really the end all be all of trading. And then beyond that, you don't know what you're doing when you first come in. And I think one of the worst things, there's all this free information out there, and something I've been talking about a lot lately is that a lot of the free information you get, especially when it comes to trading, are half truths or outright lies. And it's not that people out there trying to lie to y'all. Those of you listening in, not people trying to lie to you, really. I don't think so anyway. But it's just that they learn things incorrectly as well. And then you kind of keep repeating that over and over again. And it's only unless you've been in the market for, 15, 20, 30 years, and you see that half truth is a half truth consistently, that you actually recognize that. And so, everybody's like, oh, well, I can do all this, I can learn it all on my own. And, the reality is most people don't learn it on their own. Most people need to have some sort of education in it. But, if you're sitting there following online, all the free stuff online for a year, and you're just still consistently losing, there's probably something to understand in that.
Well, I think everybody doesn't want to talk about the unsexy stuff of trading. Yeah. For example, there's lots of indicators that there's tens of thousands of indicators that you can use successfully for trading, but that's not the question. Really, the question is, if you think about trading as there's a binary output from the point in time that you enter a trade, the prices can either go up or it can go down. It will never stay the same. So the question becomes, if it goes down, and how long can it go down and stay down before you puke the position up?
Yeah.
And what's your conviction level about the entry point and the long-term value that you see at some point in the horizon? And if you believe in something and you see the long-term value on the horizon, and you're, a very simple way to do this is like, if you start seeing yourself and other people inside of your circle using a new brand of anything, start buying the stock if you can, because you're putting money literally into the company anyways. You might as well have a piece of the company. But if you believe that you're early in the adoption curve of that product, right? Then, and you enter a position, really the only reason why you'd sell is because you entered too large of a position at that point in time, and you guessed wrong, and it went against you in a very violent way in a short period of time that induced a lot of emotion, right? For example, Bitcoin. If you entered at 102 and you blew all of your stack, you have no more cash, and you just lump summed it into Bitcoin right now, you're sweating bullets. You're already down, double digits, and you're wondering if you're going.
What was that?
So, yeah,
you went out, man. Your voice went out. Your mouth was going, but nothing was coming out there.
Yeah. So it's all about your entry. It's all about how much cash you have in the wings. And so it's like keep your powder dry, so that if you're wrong on that entry, right, it goes against you, you have cash to buy. The only people that are sweating it right now are the people who don't have cash to buy on the dip, because the dip is a buying opportunity. That's literally, you're getting it cheaper than you could yesterday, or the day before, or the day before, or the week before. And you start wondering, okay, well, when's the last time Bitcoin was at this price, and where's the potential bounce? And so, Bitcoin, if you look at the price charts, and don't quote me on the exact numbers here, but we had a major topping in the last cycle at 75. Or around 77, depending upon exchange. Well, it hadn't been retested, and we're pretty close to that, and so when I'm looking at what could Bitcoin possibly do from a price perspective, if I was a betting man, this is my opinion, no, just speculation, that we're going to retest it. And when I say retest it, and this is where people get, in trouble, they'll load the boat at 77 at that previous high. When I say retested, you may see a wick down to 71 to clear out that liquidity, just suck it all in, and then boom, you see that retracement. So don't be afraid of that. That's just kind of, the question is can you take advantage of it? If it happens.
Yeah, and I mean, I think it's a great way to look at it, because again, Bitcoin, with anything that you get involved in the markets, with whatever asset you get involved in, you have to be honest with yourself about what your outlook is. What is your timeline? What is your time frame that you're looking at? If you come in and you say, "Oh, my time frame is 10 years," but on this pullback here, you're freaking out. I'm like, if your timeline's 10 years, what the hell are you doing looking at even a weekly chart right now? That makes no sense. But see, people are not really productive a lot of times, right? At work, they're on their phones, they're Instagramming and Facebooking and Xing and watching Pornhub, or whatever they're doing at work. Sorry, Andrew, didn't mean to call you out there. But now if you're in market, you're looking at the 15-minute candles, right? Makes no sense at all.
Well, and Andrew probably sees it a little, like, he knows Wall Street waters are rising all the time. Like that's kind of where his focus is. And so, and it's true, but there's quite the dissension even amongst Bitcoiners as to whether that's good or not. If you really get into this, Bitcoin community, there's a lot of people that are going, Wall Street's taking over our protocol, and that all these derivatives are going to essentially take the place of the original. And they're not wrong.
Yeah.
Yeah. And that's not, that's a foregone conclusion if you want adoption. And as far as I'm concerned, that's a prerequisite. And so, if you look at like these buying opportunities as the price has to move down a lot so that these institutions can buy without it moving up a lot. And so these are the natural swings that are associated with big buyers coming into the market. And guys like Citadel announced yesterday that they're going to
Yep.
be a new market maker for crypto. Citadel has no interest in any market that they can't do lots of volume in with a ton of liquidity. I mean, like that's like, I can't even give an analogy, but that's like somebody who comes into the casino and is literally like, "Do you have a table that has $1 million minimum bet?" It's like they don't play unless it's just huge stakes, and like that they've done probably their homework. They're not going to come out tomorrow with a news announcement that goes, "Well, just kidding, we've changed our mind, we're not going to do this."
Well, I'm
Well,
sure Andrew will post it if they do.
yeah, liquidity over the last 6 months with Bitcoin has just, again, it's materially changed, right? So we have Bitcoin futures, we have spot Bitcoin, we have Bitcoin ETFs, we have Bitcoin swaps, we have Bitcoin options. You have adjacent to Bitcoin, you have MicroStrategy bonds, you have MicroStrategy preferreds, you have MicroStrategy convertibles. All of that will continue to happen across even other corporates on a go forward basis. So there is a quote unquote TradFi ecosystem that is continued to be built, and it's it's going to continue to grow and grow and grow and grow. And oh, by the way, that same thing will find its way to Ethereum as well as the second asset in this quote unquote class that is, on its way to being financialized by Wall Street. And whether or not it's a good thing or not is completely irrelevant because it's happening and will happen. And it just
Do you think that this hack, even though it's not quote Ethereum's fault, do you think it's going to expose the chain for what it is and cause them to start to back off of that? Or do you think
because Ethereum wasn't hacked, it was Bybit that was hacked. And if you see the news today, it was one of their safe wallets that was
Yeah, it
actually
was safe.
hacked.
Yeah.
It's not an Ethereum problem. It really wasn't a Bybit problem. It was.
But you and I both know, like, optics is like, most people won't know the difference. They're just going to hear ETH hack.
Yeah, but the trains left the station, right? There's billions of dollars in Ethereum, spot Ethereum ETFs. Oh, by the way, the rule associated with staking being attached to those spot ETFs is about to change. That will make a huge difference associated with assets that will go into Ethereum. I'd make the case that will accelerate it because now you're getting a yield associated with those ETFs, which is
there's a huge differentiator to even Bitcoin at that point.
So there's going to be another ecosystem of swaps, options, spot, bond, all that stuff will happen associated with Bitcoin and Ethereum. And so that asset class will grow and grow and grow and grow and grow. And, you'll have the ability to go out and search and get, attempt to get alpha associated with different trades and different, pricing associated with those mechanisms inside of just those two assets, right? So, crypto, let's call it, and Bitcoin is growing up. And in that growing up process, you absolutely have the opportunity to make some serious dough that is beyond the price of just buying and holding spot Bitcoin.
Well, yeah, it's all these derivative products, and I think I heard some alpha from Sailor's mouth the other day, and I tested the theory and went and read a few charters, and I think it's as simple as this. There's a lot of companies in this world.
Mm-hmm.
They all want some exposure at some point to Bitcoin. If you take that general thesis, like the more exposure that they have, the more people that want some of that exposure. It's pretty steep adoption curve is the bottom line. And so if you look at all of these things, like these mechanisms that people don't understand that have been successful, they're successful because of one reason. They're successful because they are allowed to be purchased inside of huge charters that control a lot of money that give those institutions exposure to Bitcoin. So if you go out and you just basically start with the premise of, okay, where is the money? Okay, the money's in the police officer pension fund of a specific state. Well, you go get that charter. It's public information. You read that charter. It tells you what they are allowed to hold as assets. And then you go, okay, what product gives you exposure to Bitcoin that they are allowed to hold? And if you start at that premise, you will find why products are becoming successful. And it's, Saylor made the point, it's like in Japan, none of the charters will let them hold anything but equities. And so that's why MicroStrategy has been as successful as they have in raising capital out of that region, because they can't hold Bitcoin except through the exposure they get through MicroStrategy. And so you just basically are creating products to serve these massive pools of money that allow them to get exposure to an asset class that they want exposure to. It's just simple, like, supply demand type dynamics.
Yeah, and I'm glad you brought that up, because that's the question I'm often asked, year after year, which is, well, why the hell would you buy MicroStrategy if you could buy Bitcoin itself?
Because it's against the law to buy it if it's against your charter.
Yeah, exactly right. There's so many reasons why you would do that. Everything from you're not allowed to buy Bitcoin to, well, tax implications, because equities are different from crypto in different areas of the world. I mean, there's so many different ways, and I think a lot of times, when retail comes in, they tend to really oversimplify it, and they're looking at it again just through their eyes. Well, I own Bitcoin. Why does it make any sense for me to buy MicroStrategy versus the big money? Because retail seems to think, again, that they're the big flood of money into the markets, when obviously they're not. But it's what does the big money need to do, and how do they need to do it? And again, one of those ways is simply, as you mentioned there, they can't hold Bitcoin. So the next best thing is to invest in MicroStrategy.
Let's say you're in charge of a huge fund that is, because of the way the charter was written, it requires you to invest 80% of the money in REITs, because that was a huge investment vehicle at the time that the charter was written. And because it kicks off a pretty steady cash flow, like you couldn't miss, because population growth begs for new development, and development serves the population, and there's a return on that, right? And so you almost just throw the darts at the board. Well, let's say you're managing all that money and you want exposure to Bitcoin, and in your charter there's nothing, you can't buy it because of it precludes you from it. Well, what if a new REIT said, hey, we're going to take 10% of our funds and put it in Bitcoin? Well, which REIT would you put some money towards? The same old that you have 80% of your cash in already, or this new outlier that gives you exposure to upside that you can't get through the 80%, and it's only because Bitcoin's been injected into that business model? That's where we're headed, and that's why I call, like, Bitcoin the salt on every meal. It makes every meal better. Once you've tasted it, you're like, I need this on everything that I eat. Bitcoin's going to be the same thing for basically all countries, all companies. Like, they're going to have to include it because it's not going to taste as good without it. The question then becomes, how salty do you want your food? Some people are going to want it really salty. Some people aren't going to want it really salty. And so you can dial in your risk exposure to Bitcoin based upon each company's individual, conviction level, what they've committed. And GameStop's going to be a perfect example of that. There's lots of rumors, man. It's a fun time to be alive. They got $5 billion in cash sitting in the bank, and they've got no reason to invest that into their traditional business model. So what are they going to do with that money to generate yield or to make more money? Bitcoin is the logical answer, and there's the CEO's been following Bitcoin Foundation and the Bitcoin.com and all these different things that are kind of looking like the stars might align. Well, if they come out and go, guess what? We're spending 500 million of our 5 billion cash on Bitcoin. There will be a different response than if they come out and go, guess what? We're spending 4.5 billion of our 5 billion in Bitcoin. And that'll be how salty they want their food, basically.
I'm going to step on a limb here and say I bet you at least half the audience tunes in every week because they're waiting to hear of your greatest analogy that week. I think the salt one there is a pretty good one. But these are great points, right? And then we also think about, well, what else is happening when it comes in terms of crypto regulation and enforcement and stuff like this here in the U.S., right? So within the last week, Coinbase said that the SEC dropped the lawsuit, right? Robinhood said the SEC dropped the probe. And so now Robinhood's saying, hey, listen, they dropped the probe. This is great. This looks like this is going to be a really crypto friendly, crypto encouraging kind of administration here. We've been over in Europe because they've allowed us to really kind of expand and do things a lot, with a lot more clarity there. But now it looks like we're going to be able to do greater things here in the U.S. And then, of course, they bring up something that we've talked about multiple times: tokenization of equities, right? And all of a sudden, Robinhood goes from this thing, which was really jumped up during the meme coin, the meme stock, the GME, the whole thing back there during the pandemic and after the, and then they got shot down when they found out, they were the order flow thing, right? And now they're back to the, hey, listen, hi guys, we're back, and we're about to do a lot more now and put out there a lot more crypto products. And, I think a lot of times when retail kind of, hears these things, they expect like immediate responses. So Robinhood says this and they expect, boom, let's all just rock it up the next day. When the reality of it is things take a little time to get in progress and whatnot. But I think it's all about paying attention to what news is happening. If you're really into the news, right? Just pay attention to that news is happening, and then pay attention, see, does it continue to happen? Is there expansions of that news event, right? Robinhood says this. Okay, so a month later, is Robinhood saying something additional with that now? And if you see that, I think, if you're the type of person who's going to look at these news events and whatnot, when you're kind of deciding, well, how is the overall bull market doing? How is this particular company doing? I think, that's the way you have to look at it. Don't expect that a news announcement is going to, result in this immediate reaction, because we know that, over the last few months, global liquidity has been kind of drying up. So, global liquidity dries up, all these things kind of happen. Hey, we get we get a washout from the top. We get the really excited people who got in, late. They're getting wiped out. They're getting, liquidated. It's just this thing that continues to happen. But what are the news events? The news events continue to be positive. And so I think it's just, this matter of time as we continue to push higher. All we've done at this point right now is swept the low. I mean, that's really all we've done. We're a couple of $1,000 drop below that, whatever it was, January, February low there. And for now, that's really all it is. But like you said earlier, Tillman, even if it goes down to 75, it's not really that big a deal. All you're doing is retesting the previous, whatever that was, 6 or 8 months sideways kind of, range that was going on there.
Well, it's the point of the breakout parabolic curve, like that, where we went parabolic was at that level, and where we went into price discovery. And so, it wouldn't surprise me if we retested it. But to your point, we just swept a liquidity pool beyond a threshold that was very key. And I actually look at those as entries. I don't mind buying the falling knife at those points. And I'll tell you why. because when I see sentiment at a 23% fear level, that tells you that this move hurt a lot of people. There's a lot of blood right in the streets, and so that's what the market does. That is where rounding bottoms, in my opinion, happen. Like that's where they go, okay, we've extracted what we can. There's now, let's push it higher again. Start buying our position.
Yeah, yeah. So in terms of Wall Street and stuff like that, Andrew, what else is going on over there, man? Is there any other big news we've kind of missed?
Well, a couple days ago there was some scuttlebutt amongst the Wall Street folk that J.P. Morgan is pushing to become a custodian of Bitcoin and Ethereum, to join Bank of New York Mellon, State Street, City are going to come on board, and then J.P. Morgan's going to come on board. If and when that happens, you'll now have the four largest custodians on the planet will then be available to custody Bitcoin and Ethereum. That goes to the truth and reality associated with the likes of Citadel coming in and being a market maker associated with Fidelity and others. What's interesting is that traditional finance, Wall Street, whatever you want to call it, their actions continue to tell us that they remain very, very bullish on the prospects of Bitcoin and others, having significant room to run. We don't have to go over it again, but Larry Fink at 500 to 700K Bitcoin, that's a 5 to 7x number, more than that from where we are now. There is a lot of money to be made with the growth of the asset, the transactional processes of the asset, and the growth of the ecosystems around that asset. If you have something that's at that number, the ability to lend and leverage against it will grow astronomically. So the likes of Citadel, BlackRock, the Fidelities, the J.P. Morgans of the world, the Goldman Sachs, the Cities, the State Streets, they're all positioning themselves to be somewhere in the funnel associated with the movement of Bitcoin from one hand to another, from one organization to another. It began with the process of Bitcoin ETFs and authorized participants. So when Bitcoin ETFs are purchased or sold, the authorized participants are effectively managing the process by which Bitcoin moves between organizations to make that transaction happen. That's going to move to Cash Create. And so now we have organizations that beyond Bitcoin ETFs are going to be available to custody, spot Bitcoin and Ethereum. So there's just, I would say that the sentiment associated with Bitcoin in particular is wildly different in traditional markets than it is in the world of crypto Twitter. We've got a fear number at 26 or 7 or 8. And then on Wall Street, they're just building roads and bridges to be able to handle the process in a meaningful way and make lots and lots of money. That's what's going on in the real world, in the funny looking, dog-based avatar world of crypto Twitter. There are other conversations that are happening.
I think to that point, I think that's why people have the sentiment that they have, is it just tells you that they're getting wrecked in altcoins right now. Because, you really, if you have a huge position in Bitcoin, this, especially if you've been in even one cycle, you're way in the black. You're feeling good. But if you've taken any positions in altcoins in this cycle at all, you've gotten your face wrecked. And it just tells you kind of where retail is versus where institutions are. It sounds like, it feels like this move, this cycle, Bitcoin is the only coin that's not being driven by retail, and all the rest of them are kind of exactly like every other cycle. Big volatile swings, plus or minus 80+%. Lots of rotation, but the frequency of the rotation of this cycle has gotten much more intense. Like in the ICO craze, the rotations would be like every month and a half, every 6 months if it was a big movement. Now it's like every 72 hours we're on to the next next meme coin that's being created, which is a testament, I will tell you, to the usability of some of these websites that help you create, specifically Solana tokens. I mean, it's as easy, literally a child can do it because they are doing it.
Yeah, the 13-year-old, right?
Yeah. I mean,
Good
it's a
job.
lot different than the days of old where, you had to be a coder to launch some of these things. It's even more, it's more simple than drag and drop at this point. It's like drop down menus and yeah.
And we're not saying, if you're listening and you're like, oh, well, you're just saying don't get into alts. I mean, we're not necessarily saying that. At the end of the day, we're all about making money. But I think the important thing is understanding what you're doing, what you're getting involved in. If you're getting involved in alts, thinking, oh, I'm going to buy low and I'm going to hold it because it's going to be the next big thing, it's very significantly against you that you're going to be correct in that. You got a very, very large likelihood of being wrong, which means losing money. Now, if you get involved in Bitcoin, even if you buy in right now, or if you bought in at 100,000, the odds are much more significant that it's going to continue to rise, right? And so it's, I've got a big thing against people. They're like, oh, I'm going to buy in this alt and, I'm going to hold on to it as investment. I've kind of continued to argue against that since 2017, January 2017 when I got in. I continue to see that alts are really, it's a trader's market. It's really most of what you're going to get in that really doesn't have, isn't going to go up based on, oh, it's going to be the next big thing that kind of, answers this question. So as long as you kind of see it as that, you go in there and you buy and you sell as it goes up, or you short as it's coming down and you buy, in the trend. Just do that with alts. I think if you're buying alts and holding, unless you're getting it at a cycle low, I think you're just kind of setting yourself up to really get screwed. I think if you're in the middle of a cycle and you don't want to stress so much, you just buy Bitcoin and then you go out there and you work and you find ways to make more money to buy more Bitcoin. You use the arbitrage thing that you guys got, not the arbitrage, but the Bitcoin algorithm that you guys got, and then just use the money that you have and use that algorithm, which is free for what, up to $10,000 or something like that, you said?
Yeah.
And just use that, and it's little things like that would get people a lot further ahead than thinking, oh man, I'm midway through the cycle and I'm going to buy this next new hot meme coin and I'm going to invest in it, because you're just kind of setting yourself up to really lose there. And if you're in the market, the goal is to make money, right? It's to make money, keep money, and to make more money. I mean, that's why we're in the market.
Well, I mean, if you believe what Larry Fink says, for every dollar you get in now, you're basically going to be getting 7 in return, and you can't find that. Like that doesn't exist. Like even if you're a real estate developer, right, and you go out and you go, you know what, this project's going to be successful. They don't define it as making a 7x on their money. Okay, they have to wait. They have to incur a lot of cost, a lot of management headache, a lot of permits, a lot of everything to develop that property. And they're looking at getting paybacks over 10 years, 15 years. So if you can stick your money at home on your couch into something that has done 40% on average year after year for 16 years, just get some exposure and you may be really happy with the results. Because if you wait long enough, it's no different than the XRP crowd. They waited very, very patiently. I mean, 7+ years. and it finally came back. And
Yeah.
so if you're patient enough and the project lasts, there's going to be huge spikes in price, and there's going to be huge lulls and valleys, and you just have to have the conviction to not go in beyond your means, and use a disciplined approach. But think about it: if you put 10 grand and used a free software that we've created, and you bought 10 grand of Bitcoin for the next 5 years, and it does what Larry Fink says it's going to do, you're looking at taking 50 grand and turning it into 350 grand. That sounds pretty good to me.
Yeah.
That's not,
But
and if Larry's wrong, you still are take it you should be using a small enough portion of your net worth where you're taking a relatively low risk, right? If it doesn't do that, your risk reward ratio is still in line, and you still had a proper risk to reward payout ratio when you entered the trade, essentially.
yeah, exactly. And again, so that kind of comes back to the whole idea of, hey, listen, guys, if you're in the market, stop trying to get rich overnight. Again, coming here, most of the time when people are trying to do that, they don't even really have the money to be doing that. And that's why they're trying to do it, right? They're feeling the pressure of bills. They're feeling the pressure of day-to-day expenses and whatnot. And they're saying, well, I'm going to take this money here and go get rich. And that ends up just leaving a really bad taste in your mouth, because it's not going to happen. It's not going to, and the worst thing that can happen is you come into a market, whether it's stocks or commodities or whatever it happens to be, Forex or crypto or whatever. And your first trade, your first couple of trades are good, because you're not going to be honest with yourself. You're not going to say, you know what, I really have no clue what I'm doing here, right? You're really not going to say that. You're going to say, holy crap, I know what I'm doing. And that's the kiss of death there, because what that means is you're going to continue doing that same thing, which you got lucky with once or twice, and that's going to wreck you because it was just luck that got it, right? Or you come in and you follow somebody that that you don't know online, and they're like, hey, you got to buy here, and you buy there, and it goes up, and you're like, woohoo, I made some money. I'm going to follow whatever they say. Because again, we go back to that idea that there are no guarantees in trading, except that even after 30 years, you're still going to lose money from time to time. There's no way out of it. And the newer you are, the more money you're going to lose, the more money you're going to lose it. The more often you're going to lose it.
Yeah, I think it's a discipline, right? And discipline is hard. When you just go into something thinking that it's easy, you tend to take very small sample sizes, and you make very broad assumptions off those sample sizes. And so, let's say you have 3, 4, 5 winning trades in a row. Is it safe to say that's going to win 100% of the time because you 5 for 5? No. Is it safe? You don't know what that win percentage looks like until you have a data size, a sample that's large enough to really draw some conclusions off of, which takes a lot of time, right? And so you should be assuming the worst when you win. And you should be patting yourself and assuming the best when you lose. What do I mean by that? Well, when I win, I want to say, did I get lucky here, or did I stick to my rules? If I stuck to my rules, I can celebrate that win, and I can go, you know what, that goes as a data point. I don't know if it's a solid data point. I don't know if it's a straight line, but it's a data point. And, I stuck to my trading strategy rules, and I have a win under my belt. Great. Mark it on the catalog. Let's say I have a loss. If I stick to my trading strategies and I get out at my predetermined stop loss, I should be celebrating just like I did on the winning side. Because if I believe in the strategy, if I believe in the edge, right, the losers are going to come at probably 48%, 45%, 40% of the time in the best case scenarios. So I better get used to the losers. The question is can I stomach and can I withstand the losers, even if they're a long string of them, before I go belly up? And so when you find that you believe you have an edge, let the facts speak for themselves over long periods of time, and have the opposite emotion. Question the winners. make yourself scrutinize those more than the losers. The losers are simple. It didn't go the way I thought it was in the time period that I said I was going to get out. And you get out, and then you take that loss and you pat yourself on the back and go, you know what? I can stomach 100 of these in a row before I go belly up. And there's no way, but like my edge is I believe in it now, and you can have that conviction that even if you go 5, 10, 20 trades in a row that are negative, if you really believe in that edge, and that's well within the realm of statistical probability, then it doesn't cause you heartburn anymore. You can ride through those storms with absolute confidence.
Yeah, and so we got a question here from Luke, who says, if you were just DCAing, do you guys think you could also just keep a 1%, 100x leverage trade on your Bitcoin? I mean, it's literally impossible to get liquidated if you always keep money to DCA. Real quick, let me just say here real quick, my thoughts on leverage. I don't use leverage to amplify my returns. I use leverage to reduce my exposure. What do I mean by that? That means if I'm going to do, let's say a 10x leverage, right? I'm doing that because I'm trying to reduce my risk, right? My counterparty risk. So instead, if my position size was $1,000, well, now I just need $100, and I've got that 10 times leverage to make up that other 900 on there. What that does is that protects me in case something happens. It's counterparty risk, right? Exchange goes down, gets hacked, whatever happens, it protects me. But it's still the same $1,000 position size. So when I look at this question, it goes, okay, well, 1% at 100 leverage, it seems to me Luke's asking, well, if my capital account is $1,000, do I just put in, $10?
Yeah.
And then leverage the rest. And my question, my thing would always be no, because you should only leverage to the extent of your position size, but your position size in relation to your overall capital account is the important.
I interpret his question differently. I interpret it as if I just take 1% of my stack and I swing for the fences 100 times, surely I'm going to get a hit that will make that endeavor profitable over time. And I would agree with that if you segregate those funds into what I would call gambling funds. Like that 100% shouldn't be 100% of your invested capital.
Yeah.
It should be 100% of your gambling funds, which should be less than 10% of your invested capital. So it's all about relative, how much does each bullet take for me to load, and how much gunpowder do I have in reserves to load bullets? That's the equation that literally dictates most successes in the market. Because, for example, it works at every level of wealth too. If I'm worth $100 million and I go bet $40 million on a meme coin, you think I'm going to have an emotional tie to that investment? Yes, I am.
Hell yeah.
If I have $1,000 and I put $400 into a meme coin, you think I'm going to have an emotional investment tie to that investment? Yes, I am. The rules apply at every level. So the rule is, don't put 40% of your invested capital in a meme coin. And so look at, like, I like gambling. I think it's great. Look at Vegas. Lots of people like gambling. And so do I look at putting $100 into 10 different meme coins as a stupid thing? I don't, because you can hit, and the probability is that you're not. The probability is that you will go through many cycles of blowing $1,000 before you find one. And let's say you go through 50 picks and you've blown $5,000, right? Did you get the enjoyment out of that chasing that rabbit as you do going and putting $5,000 to work in Vegas? If you did, then great, keep doing it. If you got less enjoyment, go to Vegas. If you hit one really big, I can't tell you anything otherwise, because you're going to go back to the casino that made you a bunch of money. So, it's all about the size of the initial investment, or allocation, and whether you can stomach losing it or not. That's really what it amounts to.
Yeah. So hopefully it helps you, think it through a bit. But and also remember, when you do have something on, leverage, you do have to pay, so often for that privilege of doing so. Whatever the period happens to be for the broker that you're using. So, there are those costs associated with it as well.
Well, and just know you're betting on the exact moment where the bounce happens, and it doesn't fluctuate below that point until you exit the position. You're betting on literally, it's like a big or a red ball in gym class that's falling from the bleachers towards the gym floor. And you can make bets all the way down. Well, if you make any marginable bet at 100x leverage, and at any point other than the point where the ball is at maximum flux hitting the ground and about to spring up, you're liquid. You're just giving money away. That's the way I look at it. So if you want to bet on your timing on when that ball's gonna bounce off the gym floor, then go for it. Just know how, think about that analogy when you're making those bets, and just say to yourself, now I'm doing it blind. So now I'm just, somebody says, okay, go. And they've thrown the ball, and I just have to kind of go now. And if the ball isn't at max flux, I'm going to lose that money. That's basically what it amounts to in my book.
Yeah. So there you go. There's the answer in all its glory. But that'll do us, man. That's an hour there, a little bit over an hour. So, we're done here. We're going to get out of here and go back and do the rest of our real life stuff. This has been a fun, lunch hour type thing. But hey, guys, listen, follow these guys. Again, you can follow Tillman at TexasOL61 there on X. You can follow Andrew at AP_abacus, and you can follow me, of course, at TXWest Capital. Capital as in money, not as in the capital of the state. But at the end of the day, we do our best to share with you guys information and thoughts, and just things based off our experience over many decades of being involved in crypto and TradFi and mining and all this stuff. And we hope that it really gives you a nice, wide kind of understanding of what we're getting. We don't always agree 100%. Now that Andrew's gone, we can talk about him. No, I'm kidding. But again, the goal here is to give you guys some entertainment, and also, of course, give you some information. Hopefully get you out of the emotional roller coaster that you tend to get sucked into on social media. We've all been there. When we were first starting out, there was no social media when I was there back then, but we all got kind of sucked into the whole kind of, these are what other people are saying and whatever, and everybody's being emotional. And we don't want you to do that, because we all believe that Bitcoin has a great future here. And ultimately, as it continues to go year after year, overall is going to continue to rise higher. And so we're positioning ourselves that way. And we're not telling you what to do, but we're giving you reasons why we're doing it. And if you find them compelling, you can jump in there as well, right? And if you want to yell at Tillman anytime you want, just, at him on X. He'll be glad. He's got a lot of really nice responses. Andrew might curse you out, but Tillman's very nice.
Try to be. Hey, listen, for $800 or whatever the price is right now, $860, you can buy 1/100th of a Bitcoin.
There you go.
Look at it like that. Just put something so you can call yourself a Bitcoiner.
That's right. There you go. All right. As always, remember, the only thing you control is how much you lose. And I think we talked about that a lot today. Again, the markets are really all about losing, and so he who loses best wins, right? I mean, that's really the way it is. It's been said so many times by so many well-known traders and investors over the decades, and it remains true today. So if you're always, when you're getting in, if your focus is on that trade and the profit you can make rather than on a system and your risk management, understand you're all but guaranteed to lose your money. So the way that their software works is all about that, understanding the risk management and not getting all in at one point. The things we teach is all
I call
about
it ask it, like automation will be your sober friend when you're drunk on emotion. It's like you need somebody to make decisions for you when you're drunk. If trading gets you so drunk on emotion, you can't see which way's up.
There you go. There you go. We appreciate you guys joining in as always. I'll be back on Friday. I'll do that market breakdown kind of show there. Fibo is out through the end this week, so he won't be able to make it this week. Maybe next week. I'll keep you guys updated, of course, with that.
I heard he went 100x on his whole stack. He got wrecked, didn't he? Or is that? Oh,
What now?
Did he go 100x on his whole stack? Is that what
No,
happened?
no, he's on a trip with his wife at the moment.
Oh, okay.
But I'll let him know you said that publicly here in front of 1,000+ live viewers. All right.
Well, I know he's a maxi, so I mean he's hodling hard. I don't doubt him for a second.
All right, everybody, trade safe, have fun, be careful out there, look for your opportunity. You know what, guys, at the end of the day, if you don't have a system, if you don't have a set of rules for why you're entering, you shouldn't be entering. Make sure you have a set of rules, follow your rules every time. And if you do that, you won't be jumping in with emotion. You'll be losing, you'll miss a lot of the really bad trades that you shouldn't be in anyway, and you'll be a lot better off. Y'all take care, trade safe out there, and we will see you next week.
See you, Chris.